Hey everyone, hey Jeff, how are you doing? Welcome to another video of Simplicity Investment Watch. Today is Tuesday, November 26th. I have a new addition to the buy list that I want to share, and I took one stock off of what I had on hold and I moved it to action. But first, our Okay, we do not give financial advice, and this information is not for investment decisions. This is for educational purposes. The stock market is risky, and any trade or investment is expected to have some or total loss. The use of derivatives increases investment risk or potential loss. Do your own research before any trade. Please consult a financial advisor or professional to determine what is a suitable investment profile for you, given your investment goals and objectives. All right, let's start with the major markets. SPY S&P 500 ETF. This is today's action right here. That's a good candle, good action, good volume. Happy with that. Green light on the markets, or at least on this one. NASDAQ ETF, QQQ, similar. Volume's healthy. Limited range today, 54 bips. Still good. It's above the anchor set on the high back for around the 11th. So still good with that. And Dow Jones Industrial ETF, DIA, another solid candle. I like it when the wick's down below like that. That's a long wick on the bottom side. That's good. That means that there was a fight pulling it up from the bottom, so that's good. Volume was better than yesterday. All good signs. Everything's green light on all three of these. For Well, the markets are closed Thursday, Thanksgiving, obviously, and then they close early on Friday. I mentioned this in yesterday's video. Just be careful. It's going to be low volume. It's not a great time to trade. Even tomorrow being Wednesday, people are going to start checking out after noontime. Traders are going to start checking out volume. I don't expect volume will be heavy, and I've said it before. I don't want to be trading in that environment. So if you're going to get a trade in tomorrow, probably the first half of the day, maybe just kind of watch it. But definitely on Friday, that it should be very thin. For major economic news, the last of the news is coming out tomorrow because of the holiday. Preliminary GDP is coming out. It's expected to be around 2.8. We'll see where that comes in. That could be a major mover. Other piece of major economic news is unemployment claims. Usually out on Thursday, but it's being pulled into Wednesday because of Thanksgiving. The estimate or the expectation is about 215,000 claims. And the biggie tomorrow, 10 a.m. Core PCE price index is being reported. That is a Fed favorite. It's expected to be 30 bips, so 0.30% month over month. So we'll see where that comes in. If there's inflationary pressure on consumer expenditures or the prices that consumers are paying. Okay, the buy list. So a lot of what I had on hold yesterday. So what is on hold? So I know it sounds kind of contradictory. Is it a buy or is it a hold? Well, they were put on the buy list, but then since then, the price action has either moved too far too fast, and I'm not comfortable getting into it right now because it's probably overextended, but it's still a good stock. And if you're already in it, it's not a sell, so just stay with it. So everything in yellow is on hold. I wouldn't take a new position right now, me personally. And if you're in it, just stay with it. What's in green, obviously, is go ahead and it's on my buy. And in the far right, I put the type of strategy that you would want to use with these. So I do have a few bearish ones. Celsius Holdings has been going down, although it is on hold, so I wouldn't action it to the bear side. Like for instance, I wouldn't buy a put, or I wouldn't put a bear call spread against it, or I wouldn't do a Poorman short against it, which I can explain another time. But in any case, I wouldn't implement a bearish strategy against it right now because I have it on hold. Uh, One that I did change is Devon Energy. So that is a bearish strategy that I had on hold, but today I moved it to green light. So it had more downward action, and I'll show that in 1 second. So that's a change from yesterday, Devon Energy for bearish strategy. And the one I added is down here at the bottom, WDC, Western Digital Corporation. That came through one of my screens just today. Instead of putting it on the watch list, I immediately moved it right over to the buy list. And actually today it had 5.18% action on it. Bullish strategy for that one. And those are the two changes. The change of status from this to Devon Energy from hold to action on the bearish strategy, and then the addition of WDC today for a bullish strategy. That's good to go. So let's start with Devon Energy first. Again, this is a bearish strategy. Here, I'll back out a little bit. You can see for the longest time, this has just been nothing but down. It had this gold dotted dash line is the 50-day moving average of the price. This green line is the 200-day moving average of the price. When you have the 50-day cross the 200, it is what is known as a death cross. So this had a death cross back in August, and obviously it's a bearish strategy. I put in some anchored VWAPs on it. Let me zoom in a little bit here. I did it off the high way back at its highest point in April. I did it off the earnings here. I did it off the earnings here. I did it off the earnings here. I also did it off the low here. But in any case, there's a whole slew of anchors here. And let me move this chart up. There's a whole slew of anchors overhead that are going to act as resistance to this. And here, these anchors right in here, it's been bouncing and fighting with these anchors for several days, even weeks. And today it took a convincing move down. So I went ahead and gave it a green light to action this for a bearish strategy. You could buy a put. You can make, for those who don't know, a put is an option contract in which you make money when things go down. There are other strategies you can put against this that I won't necessarily get into right now, but this is good for bearish strategy. Oh, one more thing I wanted to say is this is technically still in TTM squeeze, so it hasn't fired, but I'm fine. I saw this action right here tells me this close right there is lower than anything since what is this, September, since the fall. So yeah, it's good to go for bearish. Okay, and then the one I added today, WDC, Western Digital Corporation. Yeah, this action today, 5.17, 517 bips on the action. Now I mean, the volume's really nice on the movement today, so that's convincing. It's moved. Where are my anchors? I had an anchor back on these earnings. I have an anchor on these earnings. I have an anchor on the most recent low back around November 14, and it's moved above all of those anchors, which those anchored VWAPs, so, which is really good. And in fact, it did it yesterday, and today was just a follow through, which is what I like to see. And it was a follow through with convincing volume. So this caught the attention of institutional traders with that kind of volume. Technically speaking, what I want is I just mentioned this 50-day moving average when I was talking about Devon. And then when the 50-day crosses the 200-day, that's a death cross. It's still technically in that mode, but it is trending to move above the 200-day moving average, which is known as a golden cross. Now it's not there yet, but so that is one. So technically speaking, this is not the ideal, but I like it, and I would go with it, and it's a green light. Let's take a look at the Ichimoku cloud. Yeah, it's above the cloud. That's another good sign right there. So it was below. So this Ichimoku cloud will offer support resistance. It also gives you an indication of where the trend, right? So back in July, it fell through the cloud, came up, worked its way through the cloud, got above, and then fell back into the cloud, found some support, got above, fell into the cloud, found some support, got above, fell into the cloud, found some support, and got above. So there's just a lot of good signs on this right now to go with it, and it is a green light buy. All right, so here's my option screen for today. I mentioned, have mentioned in previous videos, I take everything that's on my buy list that is green light go, not a hold, but it's a green light go, and I load it into, I use the servicebarcharts.com. I load it in there and I create my filter for various types of strategies. This one, as you can see on the screen, is for covered calls. So that tells me based on the list, my buy list that I have, what are the best deals out there, or what are the best considerations out there for covered calls. I've highlighted two of them. So Shopify, right? Closed it. This is after market, right? I'm doing this after the market. The market's closed. When it opens tomorrow, all this changes. We know that. So don't go by what I'm telling you right now, but just as something to look at tomorrow. And if it still looks as enticing or as profitable as what I'm looking at right now, then you go with it. So shop closed at 112.08. So you could buy 100 shares at 112.08 in the morning, or whatever the price is in the morning. You can then sell the call, the December 6th contract, which is a week from Friday. It expires. And just for those who aren't familiar, what that means is when you sell a call, somebody buys that call, they have the right, they're going to pay you for it. They're going to give you money, and they have the right to take away shop from you at this strike price, 118 in this particular instance. They're all different prices. That someone else can do it. There's another one out there for 119. This one I'm talking about is for 118. So between now and December 6th, or at December 6th, somebody can take this away from you at 118. Now they're only going to do that, or obviously that's going to happen if it gets above 118. Okay, it gets above 118. Great. What happens? Well, you bought it at 112. Hopefully, still in the morning. We'll find out what it's worth. So let's just say it is 112. You buy it at 112. Someone takes it away from you at 18. Oh, please don't hurt me because I just made 5.28% from you taking it away from me. And they paid you 91 cents or times 100 because there's 100 shares to an option contract. So they paid you $91 if you're just dealing with 100 shares. They paid you $91 for the right to do that to you. So, which is another 80 bips or 0.8% on top of your 5.28% that you're getting just on the stock appreciation. So that's one of the best values out there from what is on my buy list. Yeah, the total return on that, if that should get called away from you at 118, if the stock price gets above 118, your potential total return is around 6%. And if you annualize that, because that's less than 2 weeks time, if you did that all year long at that rate, and doesn't mean you will, but you would be at 224% return annualized rate. So pretty phenomenal. But that's the deal on shop. And just so you may ask, okay, what if it skyrockets to $150, $200? Well, too bad you, me, lose out because all we're going to get is 118. We're going to get that 5.28%. It can go up 40% tomorrow. and all you're going to get is 5.28%. That is the downside to this strategy. You lose all the upside potential because you sold that right for someone to take it away from you. And if it does that, you can bet you know what, that's going to get taken away from you. So that is the downside of this. But let's deal with the more common scenarios or the more realistic scenarios. And that just hey, listen, just keep making 6% every 2 weeks and you won't be crying. You'll be fine. So, all right. The other one on the list that was for consideration for covered calls is CCJ. It closed at 58.62. I can sell a December 13 contract, which is a little over 2 weeks away. I can sell the strike of 62, meaning someone can take it away from me at 62. I bought it at 58. Hopefully in the morning it's still there. If they take that away from me, they get 5.7. I mean, excuse me, I get 5.77%. Oh, please don't hurt me. And if it's if it's one options contract, 100 shares, this 85 cents is actually $85 that they paid you for the right to do that. Also, please note, if you have the ability in your account's large enough, and you can buy more than 100 shares, right? Then buy 200 shares and sell 2 contracts. Buy 300 shares and this is something Jeff and I will do. Is it could be 300, 400, 500 shares depending on the price of the stock. So that said, you can go 2, 3, 4, 5 contracts at $85, and you start doing the math. So there you go. You get 1.5% just for selling the contract, 85 cents. And as I said, if it does go above 62 and it does get taken away from you, you got 5.77% on that side. So this strategy has a potential yield of 7.3%, and do that all year long, and you're going to be singing 157% for the year. So those are the best covered call deals that I have based on the list, and I just wanted to share those with you. All right, that's it for today. I was able to keep it a little shorter, and I'll work on that some more. If you have any questions or you need to reach out to me, my email's right here, mark@simplicittyiw.com. Thank you for your interest. Thank you for your time. Please, please, please click subscribe. And simplicity is the ultimate sophistication. So remember, keeping things simple is really smart. All right, everyone. Have a great night. Happy Thanksgiving. Take care. Bye.